What's up, guys? Vulcan Trader here. Just wanted to do a quick market update. Sorry I haven't done another one recently, but just been busy. But as far as crypto, I'm still got my long-term investments, and then as far as my swing trading account, I've got like half my money in these right here from BitW, OBTC, ETHE, GDLC, and MSTR. And then BitQ, if you maybe get a Robinhood account and you can't get some of those or some over the counter stuff, then you could buy BitQ. It's one you could buy, or you get, which is basically a basket of various ones of these like Murrah, MSTR, Riot, I think, and Coin. But anyway, those are the ones it's got in there. There's a different way to play it. And but anyway, Bitcoin could drop down to 20 or it could break the 50-day moving average, in which case I'll put the rest into it. But I was holding the other half of my account in, as you know, an Open, Redfin, Sedge, and SunPower, and those had a outside reversal. I don't know if you see this here. They're just usually a red flag from a swing trading perspective. See right here, this entire red bar eclipsed this green bar here. And whenever you have that happen, like the top and the bottom is outside the other, that's a red flag for swing trading, and you should exit. And I waited a little bit too long. I exited here, but probably should have done it right there actually. But that's what happened. So like same thing here. You see this one here is going up, outside reversal, boom. You sold right there, and then it might go back a little bit, but then usually it follows. It shows you that somebody that has a big position, they're waiting to sell into strength basically and just empty a bunch. Let's see, and then Sedge, same thing, outside reversal right here, SunPower right here. So I exited yesterday on those. It's like this one, let's see, it's below the 10, above the 20. This one's below both. Redfin, also below both. Like these could recover and keep going. I just want to have extra cash, and if these were to go like this and go down I don't want to lose a bunch of extra money in the short term. I wouldn't be afraid to hold these longer term if this is my only idea. But like I said, I want to go 100% crypto eventually. I was hoping these would just slowly grind up and not give me too much trouble, but wallets to maybe make a little money until I felt safe to go 100% on crypto, but doesn't seem to be the case. But if you like these and you still want to hold them long term, I don't think they're bad to do that and hold through some sort of a drawdown until they recover. But anyway, that's just what I'm doing. So so I'm 50% cash just because the market's not favorable. Mark Minervini, he had a tweet saying that this is a hard penny environment, and I agree with him. He's a market wizard that he typically gets 300% a year. So what he averages. And he's actually winning the U.S. Well, I mean, he won it back in the 90s, and he's actually entered again this year, and he's winning the U.S. Investing Championship currently. So, he's really good and better than me, but hopefully I'll be as good or better than him one day. So I agree with him. Just you got all these false breakouts, everything looking like it's going to break out like right here, and it turned into something crappy. And I mean, Bitcoin did the same thing. I don't know if you saw it, but like right here, it looked like a real tight consolidation period, and which is per buy point. Well, if it would have gone up here, but then it cracks down. And whenever you got that, then that's typically a sign of a weak market. You don't want to be in it. And we look at, the big cap ones like Facebook, Amazon, Apple, Google, Microsoft, they've been doing okay. And that's why you see the indexes going up. But as far as growth stocks, they've been weak. They're these actually look okay, but those are cybersecurity stocks, so maybe cybersecurity is doing better than most. Let's see, like Shopify, it was going to all-time highs and then gap down, and it looks like it's probably maybe gonna do another shakeout first if it does start to do that. And then Zoom was riding up and then crack downwards. Docky's looking all right. Those actually, they look all right in the sense that they're going up. I wouldn't buy them here because there's a good chance they could go down to here. That's not something I would buy, that type of a move, if that makes any sense. They're not looking weak, but then it's still not safe because they could do the same as what some of the, you're seeing some of these others where they're up high and like, yeah, shop. So it's going up like this and then turns down and could continue back down to this area. Anyway, like, or another good one, like pins. See, it was grinding up slowly riding above that moving average and then crack down here. A lot of people exiting because they feel that the momentum's over. But you just get a lot of smaller short moves like this, or even smaller than that. And you just have to sell quick in this type of environment. You can't hold stuff as longer term for bigger moves. So you have to sell on green days into strength if you want to, buy on a turn. Like if something's going down like this, you see it start to turn, go above, and then you hold and wait until it breaks like the 10 and the 20 before you exit, something like that, or even sooner when it's not some green and you're at maybe 20-25% profit, but you're not going for like 100% hits here if you are doing it. But still, it's kind of risky environment to be in nonetheless because not everything's even doing that. We're going to look at Wall Street bets, which is kind of the leading sector recently. Like all these ones that I got stopped out around here on Wish, which has gone down further. AMC, I want to say I got stopped out around here. And it looks like it might be bouncing, but it's above the 50-day moving average, but under the 10 and the 20. So maybe it'll bounce and go further, maybe it'll come down, but this is not something I believe in as far as a long-term play. Unless you get some sort of fundamental thesis that why you should hold it long-term, then I'd say the 50-day moving average would be the last thing to stop out on. But I mean, I would have sold some here already if it was me. Just because it's how it's acting and just everyone in it already, I find it hard to believe you can get as much hype as we've had already to bring it up even higher. But I could be wrong, and maybe it will continue. So, but anyway, that's I play something from a trader, swing trader, or swing trading with a typical stop loss and all that type of perspective. If I don't have a long-term investment thesis on it, and then because GameStop here, for example, I had bought GameStop. Well, I had actually bought some here, then I switched to AMC somewhere when it was in this neighborhood. Then I bought it back, went up to here, and then turned around and I was like, I'm gonna try and hold it longer, which was a mistake. And then I was like, okay, I'm gonna stop out if it clears the 10, and then I was like hoping it would bounce, kind of like it, because AMC looks like it's bouncing if you see at the moment. But then I'm like, okay, fine, I'm over, I can't take anymore. And then what did I do? I kept going. It's still down even further at the moment. Could reverse now and go up back to here, or it could go lower. You don't know. They don't always come back, and so holding for a bounce is not a good one. Like look at what's the recent one, Torch, or it used to be called Torch. It's not. They changed the name to MMAT. But look at that. It's up here, drops, and then you think, oh, it's gonna bounce here. It's gonna bounce here, and they don't always. It's still going. So you end up, and same thing. Or Dogecoin, for example, would be another one that was really hyped. So it went up to 70 cents, thinking it's going to recover, and what's it doing? It's still going down. So, gotta be careful. Unless you really have a reason why you think it's going to go all the way back up at all-time highs soon, go further. I mean, it could go up to $1 by the end of the year maybe or something, but the reason I don't like Doge is inflationary, whereas like say Bitcoin is not inflationary. Even Bitcoin Cash or Litecoin, they have a limited supply, whereas these ones don't, even though, so that's the reason I don't like Doge. It just had so much hype to overcome the inflation because of Elon Musk and whatnot. But, so from a fundamental standpoint, it's not a good currency because it's inflationary. But I did make some money in the short term. So you gotta have a way to lock in some gains is the point on those. And then, Workhorse, same thing. Got stopped out around here when it broke those moving averages, went down further. So don't always come back. Sometimes they do, sometimes they don't. In this type of environment, they're printing so much that we've usually had that happen. But if you play like that in the coming years, it's going to hurt you. And you end up losing money and you won't survive long term as a trader. If that makes sense. So maybe if you're, I'm going to hold through stuff like this, if they're printing money because the Fed's still printing money, that's a decent rule. I suppose you could maybe try and do that and that, but once they stop printing, you can get hurt really bad. So that's why that type of thing has been working, because of all the money printing and the hype. And So yeah, but then as far as indexes, we look at, say, the NASDAQ, which is all the big tech stocks. Like I was saying, Facebook, Apple, Amazon, Google. And you see like all they're up above the 50. Google, Amazon, Tesla be another one. It's actually above it too, because it's in the indexes now. And we got like S&P 500. This kind of scares me, to be honest. Like I've been saying, even though they are printing, they could not be printing fast enough for how much we've gone up, and everyone's long. So like right here, you see back before the Corona crash, had a move up, kind of like see this move here. Had a similar one maybe right here. You could argue, drop down, hit the 50 like right here, and then comes back up to the top of the line, and then boom. So it scares me, makes me wonder if we could have something like this here. See, goes here, comes back down to the 50-day moving average, top of the line. The volatility is contracting. It's very unvolatile, and then it goes, could crash. So I don't know. Maybe if we get a good drop here, maybe you could consider, or even could consider some SPY puts here, even for like a couple months out. I don't know. I'll have to think about that, but nonetheless. But that's why I'm 50% cash. I'm kind of afraid of that because, anyway, the big tech stocks that make up like half the indexes at this point, they're doing okay. But all the smaller growth stocks, like I was saying, like we look at the FFTY, it's under the 50-day moving average, which is like the growth ETF I typically look at. And then ARKK is another one. It's above it, but you could check out maybe some of those. Maybe they're doing better. But it's just not an easy environment and really choppy, and you got to take profits really quick. So not typically what I would like to be, and then there's potential things to crash worse. So anyway, I'm just waiting for more favorable conditions and breakouts and stuff working better, or crypto to break and hold above its 50-day moving average, or I'm going to buy the dip on the crash if it breaks down to like 20. Bitcoin breaks down to 20K with the other half of my money that I'm saving in cash. But yeah, that's pretty much it. And as far as the China, since I'll go to that, since some of those China stocks I talked about, so they went down even further, just like I was talking about. They don't always bounce or come back. So like, I can't remember, somewhere around here I want to say I said to buy them, and they've undercut that at this point. But we look at on the weekly chart, what I had said was, this is the only one that did it actually. But the entry was to wait until you have a close above the prior week on the weekly chart. That Baidu kind of did it. Yeah, you kind of, anytime you're buying the dip, you almost want to put like half your money in at one point or a third, and then you slowly average down until you get your full position, just because it can keep going longer than what you expect before it bounces. But anyway, this one, see, this week closed above this week. But if we look at some of the other ones I talked about, at home, for example, see, it broke above the prior week briefly, and then it came back down. It didn't close above it. It's typically going right before to show a really strong close that the trend is possibly reversed. Same thing on here in this one. See, went above it. As soon as it touched it, turned around. So maybe it closed above the weekly. So sorry, I can't remember if I said that exactly. I think I maybe said broke above it, but maybe I should have said that it closed above it and held and finished below that. And then as far as the China education ones, you had TAL. Let's see how it did it. Yeah, same rule would have saved you there. And Edu, same thing there. Go to, yeah, same thing on this one. So it, waiting for a close above the prior week would have helped to maybe know that. I still think these will probably recover and maybe go back up to here. Some of these at least. Not everything, but just all the China stocks are so beaten up, they got to recover at some point, I'd say. But yeah, hopefully maybe the U.S. market doesn't crash and these go even further, and these are leading. It's hard to say. I'm not sure how the dynamic between that works, but there's a potential. Or these could have been bottomed right now even, and they're just one last little shakeout before. It's really hard to say, but just the fact that they have run up this much, crashed this much, I feel like they're going to recover at least some of this at some point. I don't know if they'll continue, go back all the way to the all-time highs and continue. You have to know more the fundamentals behind them to say that, but yeah, shit. Yeah, so anyway, that's this one's been a rough one. But yeah, could try and average down some more if you didn't put the full position in it, and then but yeah, you still gotta, even when you're averaging down, that has to be your plan ahead of time, and knowing, okay, I'm gonna put in this much, then this much, and this much, and then I'm still gonna stop out if it gets even below another certain point. to preserve your capital so you don't just get taken in something that just continuously goes down and never recovers. So anyway, that's it. Like, subscribe, hit the bell, share my videos, help me out. Give me a comment, and talk to you later. Live long and prosper. God bless.